It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be discussing the Hindenburg Omen, a scary technical indicator that has been talked about a lot on the news lately. We'll look at what the Hindenburg Omen is, what it's supposed to predict, and determine if the market has already given us this omen. Without further ado, let's begin. So what is the Hindenburg Omen? Well, it's a technical analysis pattern named after the Hindenburg disaster of May 6, 1937, during which the German Zeppelin Hindenburg was destroyed as pictured. The Hindenburg Omen is supposed to predict a massive stock market crash, or at least a substantial decline. How does the omen predict a crash? By measuring the number of 52-week highs and 52-week lows on the New York Stock Exchange. The theory is that, under normal circumstances, lots of stocks might set new 52-week highs or new 52-week lows, but there should not be a lot of 52-week highs and 52-week lows happening at the same time. This has historically been predictive of a pending stock market crash. The Hindenburg Omen relies on another technical statistic known as the McClellan oscillator. We'll give a brief overview of this here before moving on. The McClellan oscillator is computed using the exponential moving averages of the daily difference between advancing stocks and declining stocks over 39-day and 19-day trading periods. A result above zero is considered bullish. A result of less than zero is considered bearish. Now we'll look at the criteria for the Hindenburg Omen itself. First, the number of 52-week highs and 52-week lows on the New York Stock Exchange have to both be greater than 2.8% of all stocks. Secondly, the NYSE composite value has to be higher than it was 50 trading days earlier. Thirdly, the McClellan oscillator has to be negative. And finally, the number of new 52-week highs cannot be more than twice the number of new 52-week lows. With this in mind, the Hindenburg Omen has already been triggered twice in the past month. First on August 12 and then on August 24. The points are marked on the chart as A and B. Now the market is actually up since each of these points, especially point B. But the Hindenburg Omen is supposed to be a longer-term indicator, so the market's performance over the past couple of weeks isn't really relevant. Historical data confirms that 77% of the time, the market has fallen by at least 5% following a Hindenburg Omen, and this usually occurs within 40 days. The probability of a larger move, defined as a panic sellout, was 41%, while the probability of an all-out stock market crash was 24%. Every NYSE crash since 1985 has been preceded by a Hindenburg Omen. And of the previous 25 confirmed signals, only 8% have failed to predict declines of at least 2%. So in conclusion, the Hindenburg Omen has reared its ugly head, and if the market behaves like it has in the past, then it would seem there is a 92% chance that the market stands to fall by at least 2% over the next couple of months. However, past performance does not guarantee future performance, and many counterintuitive investors see the widespread worry about the Hindenburg Omen as a surefire sign that it's wrong. Other analysts say it's not the snake you see that bites you, indicating the market may indeed go down, but the Hindenburg Omen may not be the cause. Either way, we hope this video has been informative and that you're now armed with the knowledge necessary to inform your decision on how to respond to the Hindenburg Omen. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit TradingTips.com. Sign up for our free video newsletters. Become a successful trader by visiting TradingTips.com.